Hello, everybody. Welcome to the Trading with Ashley show. What a rough day in the markets. In fact, our little Wall Street bull, well, he has been put in timeout because you do not typically see a 31-point swing in one day and the NASDAQ and the Qs. And that was pretty dramatic because we started off the morning really good. Everything was green in the futures. NVIDIA had incredible earnings that they reported, and it looked like that the AI trade was back on and we were going to head back up, only to see that there were a lot of individuals that were profit taking. And then it came out where one of the Fed members said that they thought that the market was going to be pulling back. And you couple that with all the dynamics with Michael Burry shorting the market and everyone fearful of the AI trade. And it just created the perfect storm where you had a cascading dynamic of individuals taking profit, wanting to wiggle out of some of their positions and preserve that precious cash. Well, what about you? What about me? What are we supposed to do in a situation like this? So I wanted to kind of give you some things to think about when this happens and how you may approach your portfolio. For one, it's never great. It doesn't feel good to see this type of red. And when it happens so quickly, it can be jarring, especially if you're brand new into the market and you're like, this is not what I signed up for. I wanted the market to behave rationally. And honestly, that's why there is a market, because it's not always rational. But I want to ensure that you're coming at this with a level head and you're thinking through the dynamics so you don't have that emotional reaction. The first thing that all investors should consider doing is going through your own portfolio. Sort your portfolio from top to bottom based on how much you have won in any particular trade. And then consider taking the winners off the table, locking in some profit, building up your cash, and get ready for if there's the next leg down. That's a sensible thing to do. You're actually looking at your winners and you're trimming your winners. You don't have to take it all off the table, but consider taking some off the table so that you have that precious cash and that you don't erode all of your gains. Then go to the middle of your portfolio. Start looking at your positions. Maybe they're sold puts, maybe they're skips, maybe they're leaps that haven't moved a lot. Maybe anything that is maybe down 10% or less, and say, do I think that this could go down further? And if that answer is yes, then maybe go ahead and remove that dynamic off the table so that you can potentially catch these same trades lower before they're bleeding heavily. And then obviously this is the least fun part of what I'm going to share with you, but go ahead and look at everything that's bleeding. And then take assessment of each of those tickers. Is it a speculative stock? A speculative stock is basically one that has yet to have 4 quarters in a row of GAAP profitability. And if it is a speculative stock, is it controlling more than, say, 1% of your portfolio? If it is, then it may be time to just say, see you for now. We'll visit again later when the market is less shaky. Then take a look at your stocks that are losing, that are quality companies, and really decide, can I wait? Can I just sit on the sidelines and allow the market to do what the market's going to do, and then let these stocks go back up before you get rid of them? It's a lot easier if you're holding the shares versus if you're holding skips or leaps during a time like this, because skips or leaps, they have that time decay dynamic, and then once they have gone south and over 50% down, it's really hard to get them going again. It can happen, but a lot of times you might be better off as an investor if you just cut your losses on those and then just wait. There's nothing wrong with sitting on your hands, letting some of this noise pass, get a better sense for the direction of the market and where the market's going to find its footing. And none of us know when that is. Now, after you've done all this and you put your money to the side, now what? There's nothing wrong with just sitting on your hands for a little while, waiting to see the direction of the market and getting a better sense for what's happening in the macroeconomic dynamic. I mean, after all, we did go up so many months in a row. It was time for some kind of pullback. Now, should it have been this dramatic? Should it have been this fast? Well, probably not, but we can't control that. All we can control is how we react to it. And so if you feel like there's more downside, there's also nothing wrong with purchasing some hedges, meaning purchasing a put. Consider going out about 6 months from now. Look at something around a zero point 0.6 delta. That way, if the market continues to pull back, well, at least you'll see something green in your portfolio. Also, you have the opportunity to maybe look at other sectors. You saw that Walmart was one of the only green stocks today. And so that one, they had reported earnings, and Walmart usually does well when other stocks are not doing so well because they are the lower cost option for a lot of people. If inflation is higher, or if people don't have jobs, if AI is taking their jobs and they don't have so much money, Walmart might be where they end up. So that one will do well. Healthcare is another one to consider. But honestly, sometimes when you're having a day like this, you just don't feel like investing your money into any sector right now. And that is okay. Once the emotion dies down, once the market settles down, once it finds its footing, there will be other opportunities for you. So let's have an honest talk about margin, because I do get worried for anybody that's too heavily leveraged in an environment where things might keep sliding. Now, most of you know from using margin that you never want to be overexposed in margin. Cash is king in a situation like this. And if you are using margin, I always like to resist using any more than 30% of what they're offering me. Because if you use more, and let's say you're maxed out on margin, now, if that happens, your broker, they're going to want you to put more money in the account. And if you don't have that money to put in the account, then the only thing left to do is to go ahead and sell some of your positions to raise that precious cash. And if you don't do it, well, then they'll do it for you. And you really start to lose control of your portfolio. And I don't want any of you in that situation. So you might want to consider going back, looking through all of your plays tonight and say, how can I get more level? How can I raise some cash? And go back to the beginning of this video and start looking at anything that is green, anything that is positive, and start freeing up some of that precious cash. Another thing with margin is anything that's super volatile right now. Let's take BMNR, let's take Meta, let's look at trades like that, anything that's in that speculative category as well. Those are the ones that are requiring more margin to hold those positions. So if you're really trying to cash up and you want to get out of a sticky situation with margin, go to the ones that are most volatile right now, and that will free up a lot of margin and put you in a much better space. So I hope we have a better day tomorrow. I hope we found our footing. And if you are going to try to navigate these markets, please be a part of a community. It's when we're having days like this and moments like this that having a community around you really calms you down and helps you make more rational decisions. Trading is very emotional, and you have to be in the right headspace to be able to do right by your portfolio and ensure that you are not doing things to harm your position. There's no need to rush in and go for the first red candle. You can let things settle down. You can even let things start to head back up again for a few weeks before you jump back in. Because especially if you're an option seller, you can sell options in a variety of markets. It doesn't have to be red. It doesn't have to be green. It doesn't have to be sideways. You can do that just about any market. In fact, I had recently done a video that may help you figure out how to trade the NASDAQ in any market. I'm going to leave that video for you right here. Remember, if you're with me, Trading with Ashley, there is no trader left behind. We'll be talking very soon.